Let's talk about Eicher, since that's what we were just discussing. And given that all the business metrics seem to be falling in place, and that demand triggers also seem to be pointing towards better growth going ahead, what would you advise on an Eicher Motors?
Good morning. Thanks for having me. Yes, Eicher Motors is well placed in terms of, it is an aspirational bike, as Nikunj was just pointing out. And it is a company which has had a very strong brand recall. Lately, they've been doing more of the good things in terms of their product positioning and the right kind of movies, so that there is a greater brand recall and aspirational recall. On the other hand, they're at a price point where one step higher, they'll start competing with the Triumphs and the Harley Davidsons of the world. And a few points lower is the usual Bajaj and the Hero Motor. So I think it is that particular niche segment in which they can really focus on, which is the price, whether they can move up the price point, launch new additional more luxury models. They would probably find it tougher because of the competition from the Triumphs and the Harley Davidsons of the world. But if they expand in this niche segment into across other countries, I think there's still a growth path ahead for them, which is available. And given that sales for the last couple of years, for well-known reasons, have not been that strong, and now coming out of COVID will help some amount of that demand loss, which will come back.
If the decline in the market is to last longer, and we are to see further dips coming in, although it has to be said that the SGX Nifty is indicating that we're going to start up 0.5%. But if that were to be the case, what would be your top 3 buys?
Yeah, I think so. This is a market where 2021 is going to be a really good year, I think. And so this is the time when I would look for stocks with accelerating business momentum, whether if you take both auto ancillaries, consumer discretionary, and banks. These are the 3 areas. So let's say within an auto ancillary, take a company like a JK Tyre, for example. Now, it has a couple of things going for it. One, the company has regained its business momentum. There's an expectation that commercial vehicles will do well. Second, the company is deleveraging, so which is good for its fundamentals. And third, the company is trading at about 6-7 times earnings. It's probably the cheapest stock in the tire segment. So a combination of these 3, I think, if you add up, there's a significant amount of upside. Second, if you look at a company like a bank, like let's say Federal Bank, it's trading at about, usually about 0.6, 0.7 times price to book on FY22. And then it trades normally at about 1.2. It's a book, they have cleaned up their book quite well. The provisioning is quite good. So, and with COVID coming to and hopefully to an end, banks will be able to price their peak provisioning for bad loans with far greater clarity. So if that happens, again, there's a fair amount of upside for Federal Bank. And third is, any consumer discretionary, take Crompton Greaves. It's a company which has lots of these low-priced consumer durable products. It's less expensive than the other high-priced consumer durable companies. It's launching a number of newer products. And I think as this aspirational thing to go out and buy new items and durables, that company will benefit too.
Yeah, indeed. Just looking at some of the other names, and Kunal, we were chatting about this yesterday as well on Close, as to how the entire PSU pack, not just banks, but other PSUs as well, surged up ahead. So, case in point being an ONGC, GAIL held out very smartly, and then the entire PSB pack led by BOB sprung up 4.5%, Canara Bank was a winner, PNB was up 3%. What's happening here? A little late in the day, but they are trying or attempting at least to catch up with the private lot.
late in the day, Aisha, and you see very good price recovery into these stocks. But when I have looked at historical comparisons, PSU banking rallies, and that too, significant rallies, and especially if there is a continuation move, they generally tend to have a I would say negative correlation with the indices movement. So whenever you see strength in the PSU banking pack for quite some time, there is generally a negative impact on the broader benchmark indices, whether it's Nifty or the Bank Nifty, which you're looking at. So I think one of the reasons why I believe statistically that yesterday the indices probably also cooled off was on the back of the PSU banking rise as well. Now we need to categorize that whether the PSU banking pack specifically are going through a short covering wave, or whether there is a move of long build up happening into that space. On the short-term data front, many of the PSU banking stocks yesterday saw blend of both short covering as well as long built up. The delivery data, of course, is very good because of the average volumes, which are shot up almost 4 times or 3.5 times of their 10 days or 15 days of average. So on the back of this, the delivery data, of course, seems to have improved significantly for the PSU banking pack. But again, I think what's more important is to see a consistent follow-through price action. But from the other pack, from the other PSU names that you mentioned, like the likes of ONGC, GAIL, even an NTPC for that regards, many of these stocks are now comfortably breaking above their 200 moving averages. And I think this phenomena is happening after almost 1.5 odd year of these stocks being down, below their long-term averages. And even in the best of the market times, or when the market started to recover from the March, April lows, I think from there on itself, it took almost 6 months for these stocks to break back above their 200 moving averages. So, yes, the breakout is happening a bit late, but whether this is just a short-term breakout, I think it all depends on how these stocks behave above their 200 moving averages. If they manage to sustain, so even if there's a mild consolidation, but if they manage to sustain and keep on gradually, rising up higher, then you can probably expect a new trend in the beginning for many of these stocks. But as of now, I would place it more of a trading bet for these stocks, ONGC, NTPC, Coal India, even for that regards GAIL as well as the PSU banking pack.
Okay, let's go across to Pankaj. He's also looking at both Citi's mid-cap strategy as well as Credit Suisse market strategy, what the latest comments have been coming in. Pankaj, take us through.
So, Abha, interesting two reports coming in. One, of course, is the Asia strategy report that we're talking about, Credit Suisse, where they have upgraded China and India. And, China particularly upgraded as far as market weight is. China upgraded to an outperformer, India upgraded to a market weight from an underweight. Financials is the pack in India, what they particularly like, and they believe that the flow of money which has started across emerging markets will tend to continue. So that's the base case Asia Pacific region outlook. The interesting report which has come in is from the Citi strategist, Surinder Goyal. You've seen him on and off on our channel. And when we talk about this strategy, it's a particular mid-cap strategy. So it doesn't have a Sensex Nifty target. It's only talking about mid-cap and the small cap side of the market. And that's the space, which they are talking about. So they're saying on a PE basis, the mid-cap index after the recent rally is actually in line with what Nifty and Sensex are trading at. So that's the first thing. But on a price to book basis, it's still quite below. So they believe that there is an up room, that can happen. In terms of earnings, overall Q2, they believe that mid-cap and small cap side of the market did better, and that's always the case because the leverage over there is much higher. They have a much smaller base, and that's why the percentage growth always tends to be higher. The benefits of commodity, benefits of various other things tends to come higher to the mid-cap, small cap side of the market, and that they believe is shown into this Q2 results. Now they have select names, and they believe that these names would actually tend to do well. So they would categorize Apollo Hospital into this. They would categorize ACC into this. Actually, SRF also makes it into the list of their top mid-cap names that they particularly like. So across chemicals, across cement, across select banking and financial names, they believe that mid-cap and the small cap side of the market will actually tend to do well. From the cement pack, they particularly like ACC. As I told you, even Apollo Hospital is a name that they like. From the NBFC pack, it's Cholamandalam. From the consumption pack, it's Crompton Greaves Consumer. So all of these names is something which they like, and they are recommending their clients that the select 10 mid-cap names, which you can see on your screen, will actually tend to do well.
All right. Thanks for that, Pankaj. Rhythm Desai talks about the rally as well as the V-shaped recovery that we're seeing in Indian markets and economy. Listen into his perspective.
we have been in the camp of a V-shaped recovery for the global economy, and it's following that path. Our US strategist uses the phrase committed bull, and I would also like to say that we remain committed bulls. We think India's growth trajectory could be shifting over the next few years, and the equity markets have a long way to go before they peak out. Of course, along the way, we will get corrections. This particular rally could be aging. It started at 10,800. It's given you a pretty swift and sharp bounce. And, such rallies will get sold into. But then what do you do with that? You buy that correction, because I think we will eventually make a much higher peak on this bull market than what we have seen. Indeed, I mean, it's already at all-time highs, so it'll probably go up a lot more.
Chakri, in this market, where are you being an opportunist? Where are you taking some chips off the table with the assumption that when a shakeout happens, you will buy the same stock 10-15% lower?
It's a good question. I think there are 2-3 things that we're looking at. One is business momentum of the company, not the stock price momentum. The business momentum, if it is coming back fairly on an accelerated basis, which should show up in terms of its revenue growth. So is the company being able to grow its revenue faster than that of its competition? And so that is one. Second is its financials improving? Are they deleveraging? Is its balance sheet and P&L becoming stronger? And the third is, if these 2 factors are in place, then your stock market returns will happen as a consequence. So against that context, I'm looking at growth companies like, for instance, we mentioned either JK Tyre or Crompton Consumer, or even if you take a company like Cholamandalam Finance, these are companies which are trading well below their median multiples. Their loan growth rate is going to surprise on the upside. I can bet my bottom dollar that we will have in the next couple of quarters analysts moving up their numbers, not just for these companies, but across sectors. So where we have these earnings revisions upward are the companies that I think will benefit the most. And that will be, first in consumer, second in banking. And when I mean consumer, it also includes autos and the consumer durables. And some amount people have realized, that, protection for them, security is an important thing. So, people will tend to now start looking, and also interest rates are lower, etc. So it'll help them go out and now make that apartment purchase that they were thinking about, or go and buy that car or bike that they were thinking about. So I think those are the areas which will come back very fast, and that's where we're focusing.
Chakri, anything in the cyclical trade which you think could be called as a comeback trade for this winter, where you would say, look, I'm buying momentum, I'm not buying fundamentals, I'm simply betting on price more than anything else?
Yeah, there I think you will find some names in banking. One, we mentioned a federal bank. Second is in for a trade. We're talking about PSU banks. Now take a bank like Canara Bank. It trades at about 0.3 times book. It's raising capital. So now it has a good business momentum, which you can translate into a price momentum, for a good 15-20% upside from current levels. Union Bank, and there's another bank which is trading at a similar valuation, and also its fundamentals are improving, translating into price momentum. And these have been laggards, and laggards not in the last 6-8 months, but laggards in the last couple of years. But now with peak provisioning inside, so I think some of the PSU banks like Canara Bank, Union Bank are looking also as a good positional trades.
Naresh, for a trader, what is the importance of yesterday's trade? Has the trend got destroyed, or it is just a blip and we will be back on track?
So yesterday's trade had quite a few things in terms of, say, the gross volumes also on the FII side was lower than the last 10-15 days. So that is a lack of participation given into Thanksgiving, and at the same time, the markets had already overshot. So this is a time where for a trader is to now start looking at next sectoral rotation. So the big impact would be that what changes now? We don't see Nifty going up to 14,000 in a hurry. So the next 5% bump up is not there on the Nifty. So the big shift we have to now start focusing on is where is the next momentum coming in. So like PSUs, for example, the next place where momentum is coming in. So one has to now start looking out for the next place.
Laurus Labs, that's going to be in focus. They're looking to buy about 72.55% stake in Richcore Life. So that's going to be definitely a stock. Citi has actually downgraded Interglobe Aviation to a sell from the earlier neutral rating. So maybe that's going to have some bearing on this one. And Siemens, the numbers are out. The Q2 PAT has managed to dip. The margins, though, has seen a rise. Capgoods, interestingly, is turning out to be a place where you are seeing some dots of recovery actually kick in. We saw that move begin with L&T, and BHEL of late as well has been following up some of those moves as well. Chakri, betting on the economic recovery, would you be a buyer in any of the Capgoods names?
You mentioned Bharat Electronics. I think that's a good candidate. Where it's a company, media shy company, doesn't talk. Recently, they had an analyst meet, and there they kind of reiterated some goals. So here you have a company which very clearly, defense is an important agenda for the government. The company in itself, stock price has not really done much. It has done in line with the market, maybe at best. And the value, and so its earnings are going to grow at least 18-20% with visibility. ROEs are about 20%. Stock trades are about 12-13 times. So I think it has enough price momentum left in it for it to outperform from current levels for another good 20-odd%, 25% maybe.
Right. Just looking at the texture of the market yesterday, you saw that jump come in on India VIX as well. It spiked up about almost 10-odd%. Kunal, are you worried about yesterday's move, and is that in any way a trend indicator by any chance?
So I think yes, there was a notable jump in the India VIX. I think it shot up by almost 100 basis point. In terms of the previous reading. But then I think the market sort of factored in some of the correction on the back of the rise of the India VIX. So the Bank Nifty was already down some 500 points when the India VIX had jumped up almost 10%. In that case, and the Nifty has already jumped up fallen by almost 180, 190 odd points. So almost 1.5 to 2% was shed there as well. Now we need to see that whether there's a trend in the making. Generally, when you see India VIX rising, it is either in the anticipation of some sort of an event which is lined up, or there is an anticipation of a fear gauge, which moves across into the market. So as of now, the fear sentiment is still not there for the markets. Yes, people have missed out into the rally, and they are probably wanting for the markets to correct, but there is no fear indication as such. So I would generally sense that maybe the India VIX may not see a significant follow through of the same kind of a price action which you've seen yesterday. So we need to see how the India VIX as a trend behaves for at least 2-3 days, because if there is a successive price trend, and if you see successive price gains on India VIX, then there could be a more damaging effect which could happen into the benchmark indices. But I think yesterday's one-off day on the India VIX may not be a precursor or a reading as such. We need to see sustainable trends at least for the next 2-3 days, and I think if that happens, then you can probably attribute that maybe the indices can go through a marginal mean reversion process or a much awaited correction as well.
Okay, let's just mark then the pre-open rates, and unlike what we were expecting given the kind of drop that we saw in the global markets overnight, pre-open rates are indicating a fairly steady start for the Sensex, up about 300 points, and for the Nifty holding out around the 12,900 mark. Do remember we took a bit of a breather in trade yesterday. But to the top 5 stocks then to watch in today's trading session. Siemens is the first one on the back of numbers. A 4.7% fall in their net profit to 333 crores, largely on account of higher expenses due to the lockdown. The revenue from operations as well fell, and in fact, the company said that the new orders from continuing operations grew about 8.7% to 3,220 crore rupees. They have a strong order backlog of 1 year's revenue, partially on account of the lockdown period, which resulted in reduced revenues. Margins at 12.9% versus 11.1%. Lakshmi Vilas Bank, well, the central government via the Finance Ministry notification sanctioned the scheme of amalgamation between LVB and DBS Bank India, and that's going to come into effect from 27th November 2020, where the branches will be operating as DBS Bank India. Next up, Lotus Labs. The company has signed a definitive agreement with 8 Roads Ventures and Venture East Proactive Fund, as well as Venture East Life Fund 3. They're going to acquire 72.5% stake in Richcore Life Sciences for 246.7 crore rupees. Astral Poly is going to enter the business of manufacturing trading of plastic water shortage tanks and add a new capacity. The total investment slated for this is about 75 crores. And Interglobe Aviation, or Indigo, is on Citi's radar. They believe the company is flying at too high an altitude. In fact, their latest report downgrades the stock from a neutral to a sell rating with a 1,400 rupee target price, saying that there are many imponderables regarding the sustainability of the Q2 drivers, and the market share may have peaked for Indigo. They continue to value the company at 2.2 times the FY22 EV to sales. And let's get a move on and connect with our chartists as well to find out their mid-cap recommendations. And Naresh, what's on your radar this morning?
So the stock on my radar is Tata Power. This is one of the few stocks which is making a structural pattern of a cup and handle and say a longer term pattern in terms of the say sizing in terms of the targets going forward. And it has made multiple attempts around the 61-63 mark, and a little bit of flip-flop here, and we could be looking towards the longer-term target price of 7,500 also. In the short term, looking at a stop loss at 60 and a target price of 66.
Okay, and Kunal, what are you spotting from the mid and small caps?
Well, it's an interesting mid-cap name. It's a one, Westlife. After some time, the stock has found its, momentum back. After almost 2.5 months, the stock has, now seen a good price volume breakout. Yesterday, we saw almost a 3.5 to 4% plus kind of a move on the stock price. And, on the back of this, I would expect that the stock could see a follow-through price action. So, the swing breakouts or the resistances for Westlife is around 430, 435 mark. I would expect that the stock should cross, beyond those levels as well over the next couple of days. So buy with a revised target of 435, and stoppers could be kept at 400 levels.
All right.